Hi everyone, a very good afternoon and welcome back after this very short break. You're watching the newsroom on ET now. I'm Mubina Kapasi. Taking a look at what the markets have been up to. Well, we've cooled off, from the high points that we saw, but still managing to clutch on to that 11,490 mark. So it's a bit of a choppy day in and out of the, the red zone for the Nifty 50, and the Sensex is at 38,850. Well, let's tell you then what are the big movers and shakers today in trade. First up, can't get our eyes off, the auto pack. So starting off with Tata Motors, which is continuing the momentum that it witnessed yesterday as well in trade. It's one of the top Nifty gainers, 5.4% higher for the stock at 130 rupees. This after we had Mr. N. Chandra talking about a reduction in the debt levels of the company. The net automotive debt, remember, is 42,000 crore rupees, which the company has said is unsustainable. So actions are underway to significantly lower debt, and this time around Mr. Chandra has also put a timeline, which is all the more, getting people very optimistic on the counter. Moving on, another stock that is in focus is, or rather a pack of stocks that are in focus are the two-wheeler names, TVS Motors, Bajaj Auto, all of them. This after the finance minister dropped a hint that perhaps GST on two-wheelers could be curbed, as she believes that, well, it's sort of neither is it a necessity, nor is it a luxury either. So perhaps we could see some curbing of GST on two-wheelers. TVS Motors is up and away in trade. Media stocks as well in focus. Zee Entertainment, Dish TV, both are rallying. We're seeing a lot of interest come by in Zee Entertainment, which has been up for the most part of last week as well. So we have seen an uptick from the lows of 170 rupees for Zee to 212 rupees. Dish TV as well, by the way, seeing stellar gains. IndusInd Bank, take a look at this stock, and the reason why I want to flag this one off is because this too has seen quite a bit of momentum come by in the last couple of days. This week itself, we've seen the stock go from a low of around 513 to now 556 rupees, 3.7% higher for IndusInd Bank. And finally, let's talk about JMC Projects. This one is rallying in double digits. A reason could be that it has recently won orders, and it's something that's keeping the stock in focus. A massive 13% rally is what we are seeing. Okay, meantime, Coal India, take a look at that counter. The moves over there are a little limited, but JP Morgan has maintained their overweight stance here with the target at 192 rupees. They believe that the two factors that have been impacting Coal India should sort of ease from here on. We're talking about the receivables, which have been at elevated levels, but as liquidity conditions for the discoms improves, these receivables should sort of come off from the elevated levels. And secondly, the fact that inventories at power plants as well have been declining. It's now at the lowest since March. So volumes were only expected to go higher from here, and they believe that Coal India is in a strong position to sort of capture the market from the Indonesians as well. Remember, we have a lot of Indonesian coal that comes to India, so that as well Coal India should be able to capture. Also, they say that the markets are currently pricing in the FY21 earnings as new normal for even FY22. But JP Morgan believes that the FY22 normal earnings will normalize, as the market as well improves. So that's Coal India for you. All right, well, moving on, Vedanta has moved the Supreme Court to reopen the Sterlite plant after the Madras High Court ordered the plant to remain shut. Abhimanyu Sharma is joining in with the details. Abhimanyu?
Vedanta has moved the Supreme Court against the Madras High Court order, which had denied any relief to them with respect to the reopening of the Sterlite copper plant in Tamil Nadu. Earlier, the case was admitted before the NGT, after which it was transferred to the Madras High Court, which had ruled against Vedanta and had denied any possibility of reopening of the plant, which was closed on allegations of pollution, which were initially raised by environment groups and local villagers in Tamil Nadu, and subsequently the Tamil Nadu Pollution Control Board and the state government had acted against the company. Subsequently, the case was heard before the NGT and Madras High Court, in which various submissions were made by petitioners who had claimed that the copper plant was polluting the environment. However, Vedanta had submitted that they had all requisite clearances and environmental permissions to run the plant, and they had also claimed that absolutely no pollution was being caused from their side. They were also taking corrective measures to ensure minimal damage and change to the local environment. It remains to be seen how early this case will come up for hearing and what contentions would be put forth by Vedanta while contesting the Madras High Court order.
All right, Abhimanyu, thanks a lot for that. Well, the fact that the Sterlite plant is an extremely important one in terms of copper supply as well to the country and for Vedanta as well, it's not surprising that the company has now taken it to the Supreme Court. Well, moving on, take a look at Viatech Wabag. The stock price, while today it may be, a bit on the red, it has had a stellar run up in the month of August so far. We just have the news that the company has been on a fundraising drive and has managed to accumulate around 120 crore rupees from HNIs, including Rakesh Jhunjhunwala. Avan Dubash now joins us with the details.
Water treatment, Viatech Wabag in focus as they have managed to raise 120 crore rupees from marquee and high net investors, including the wife of ace investor Rakesh Jhunjhunwala. Rekha Jhunjhunwala has invested close to 80 crores for 50 lakh shares in the company. In addition to that, Basera Home Finance has bought close to 15 lakh shares for 24 crore rupees. And you've also got Sushma Anand Jain along with Anand Jaikumar Jain getting about 10 lakh shares for 16 crore rupees. All of these transactions have happened at a price of 160 per share, a discount of about 42% from the current market price. In fact, the management of Viatech Wabag saying that this is the first fundraise since their IPO in 2010, a very well-timed equity infusion that will provide the necessary growth capital for the company. Remember, in the month of July, Viatech Wabag had said that in order to fuel their growth plans and explore newer business opportunities, they plan to raise 400 crore rupees. They've also approved an AGM meeting on the 23rd of September.
All right, Avan, thanks a lot for that. Well, in an exclusive conversation with ET Now, Vinod Dasari of Royal Enfield charts out the road to recovery and also talks about uptick in demand. Here's a slice of that conversation.
We had a 19-20% drop last year, right? I mean, compared to the year before. FY 19-20 was about 18% lower than FY 18-19, and then there was a sudden collapse for everybody. So first is to recover back to that level, and then from there go back to the previous highs. So we certainly have the plans in place. The best part about Eicher Motor, I'm a new guy here, so I feel blessed sometimes to work in a company which has 6,500 crores in cash, very profitable product line. So you don't have to worry about short-term, some crazy actions or something like that. We can continue to do our long-term actions. So that's what's helping us. And you're right, we don't have to look at pre-COVID levels. That's just a stepping stone. It's a milestone. And after that, we'll think about something much larger.
So Dasari, if I really have to, let's say, draw a conclusion based on your remarks of demand, will I be wrong if I say that you're confident of reaching pre-COVID levels later this year or second half of this year? But for Eicher to reach, let's say, the 2019 beginning levels or 2018 level, that mark is at least 12 to 18 months away, and it will not happen before 2000. It will not happen in 2020. It will only happen somewhere in 2021.
I think we'll reach pre-COVID levels this month, not this year. And then the run rate, if you see, I think we'll be higher in the second half than last year, in my opinion.
Now, the challenge for the two-wheeler industry and the entire auto industry is that supply chain. Now, auto manufacturing is a very complex, it's a very complex supply chain where auto ancillary, auto components, all manufacturers have to come together. Given that right now, large parts of Maharashtra and some parts of northern India are still under lockdown, how has that really impacted your manufacturing, and especially your manufacturing, and how has your manufacturing plant got impacted?
Well, we don't have for Royal Enfield, all our manufacturing facilities are in Chennai. And so we only have supply chains that come from Maharashtra, and we have backup for them in Chennai. So in Chennai, because we had a period of lockdown and inter-district movement was little restricted, we used our company buses, we created a hostel, we did all kinds of stuff to let the employees come in. So Chennai-based supply chain was able to come in. So from nothing, we've been able to ramp up to nearly 50-60% of our capacity. The suppliers who are in Pune and Ahmedabad, there are hardly any which are single source. There's also a backup. So Maharashtra, we don't have plants. What was affecting us was some suppliers who have limited capacity there and don't have a backup. And fortunately, like I was saying earlier, Nikunj, we don't have any imports. We were Atmanirbhar from day one.
All right, well, let's move on from one interesting conversation to another. It's the Mahindra week here on ET Now, and today we spoke to Ramesh Iyer, the VC and MD of M&M Finance, and asked him about the company's future strategy and especially, for the housing finance business. Listen in to know more.
About 1,100 plus branches of ours are already open and up and working. And you rightly said June, July and August continues to show good recovery at the back of good farm cash flow that was there. And the sentiments are pretty positive given that the monsoon is good. I think it's important to understand, normally April to June or July is not a great period for rural given the extreme climatic condition. I'm talking anytime in the past. And therefore the moratorium that was given was during this period. So I would actually imagine that post-October, when the festival season comes in, the second harvest comes in, I think the cash flows must hold up, and rural will definitely show a very different color compared to what everyone thinks post-September the NPAs could be.
Sure. But would you say that worst is perhaps not yet over when it comes to the NBFC sector, because analysts are expecting asset quality to remain under pressure for the next 6 months to come? What is your outlook on the NPAs and whether or not we could see that easing, especially for rural-focused companies such as yours?
I think if you're talking of particularly just F21, let's say up to March, yes, there is going to be a lot of hard work requiring to be done, because not every state we are still able to operate all 25 days of a month, right? There are some lockdowns on and off. The revenues for the individual operators are also not reached its best level. So I would definitely imagine that the volume pressures for even operators would be there, which would kind of start to improve post-October, maybe in the fourth quarter of this year. One can see better normalcy happening in that market. To that extent, there is going to be this pressure on the overall collection that we would see. But if I was to look at the overall book, our understanding is there are one or two segments which may take longer, which is the heavy commercial vehicle fleet operating segment could take longer because of the load factor, the drivers not being there, etc. And the aggregator taxi segment could take little longer. But as otherwise, I think most of the product in rural, at least I can tell you, are all essential requirements in terms of transportation, whether it's people movement, goods movement. So they should start to earn, and then with the government focus on infrastructure beginning to happen, mining opening up in some states, the coal auctions will begin to happen, road projects opening up. I would imagine even the infra cash flow will be a great support when it comes to rural. And rural shouldn't see a severe setback when it comes to the NPA growth that's being discussed.
Ramesh, Nikunj also joining in. I hope you'll appreciate the spirit of my next question. My next question is that in last 10 years, for minority shareholders, some would argue that Mahindra Financials has not really lived up to the promise. I'm talking about last 7-8 years. Was that largely because of the shape how the rural economy moved, or was that largely because of capital allocation challenges?
So I think it's important. One can decide to cut off at 7 years. We may say look at 10 years. So, I wouldn't want to get into that. But surely, yes, if you look at the overall shape of the rural economy in the last 5-6 years, we have not had a very uniform ride across the country. But if you look at just 2010 to 2014 period, right, when both the farm and the infra cash flow was doing pretty well, and then look at our returns that we gave and look at the growth that we had. I know it's extremely important from a rural market perspective that it's not just one cash flow which is good enough, right? Apart from the farm cash flow and the infra cash flow has to hold up. And which is why I keep saying, if you look at the period from 2021 to 24, you will see resemblance of what we saw in 2010 to 2014 in rural market. Of course, we bet on that the monsoons would support and the farm cash flows would be good. If that was to happen, I think we will come back to return. Even within the 7 years, just take 2019 as one particular year. When the market was turning around in rural, it was a great year from monsoon perspective. Infra story was opening up again in some of the pockets. And we had a phenomenal return that particular year. We have stayed in rural for 25 years. We understand the market. We know these ups and downs will be there. And we are fortunate that most of the shareholders have stayed with us. And in this rights issue, we saw everyone participating. We are pretty hopeful that we will give them back the returns when we look at the next 3 years.
Okay, well, we'll do one thing. We will slip into a very short break right here on the show, but we have lots more interesting news lined up when we return.